Hello, chart watchers and Decision Point faithful. Welcome to this July 19th, 2021 episode of Decision Point. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin. And it's our job to prepare you for the week ahead. It was quite a day trading today. How are you doing, Dad? What did you think of today's action?
Well, it was fine. Finally, we had something to talk about to the downside. So
Absolutely. Okay, so let's go ahead and take a look at our agenda, and then we'll get right on into it. Lots to cover as usual. Carl's going to do the SPY and indicator overview for you. I'm going to look, actually, we'll both talk a little bit about the under the hood on the sectors. So we have our sector chart list for our subscribers, but we're going to share some of those charts with you so you can see what we're seeing under the hood or under the surface on the various sectors right now. And then I have a diamond of the week, and I have a question mark on that, and I'll talk about that when we get there. So without further ado, I'm going to pass it to you, Dad, for our SPY and indicator overview.
Okay. Here we go. We have a nice, actually starting at Wednesday. We had a top on Wednesday, and Friday we had already started down. Today was very climactic volume. The options expiration on Friday did not have a lot of volume, but boy, today it sure came in. We can see that it held on this support line here, and also the rising bottoms line. A little better perspective here. Your RSI is getting in the oversold territory, but maybe this time we're going to have to hit down lower in the range this time. But again, this decline here is something like this decline. There's not a lot of, it held on important areas of support, and so it's hard to say is this going to continue on the downside, but let's get into the other indicators we can find. I don't usually look at these, but here's the three major indexes with the Golden Cross Index. Now notice the NASDAQ has actually come down quite a bit. It's hit 60%. But I want to see the Silver Cross on those indexes. It's really a lot of stress on these market indexes. 57% stocks are still on Silver Cross signals. We have the NASDAQ is down to 40% of Silver Cross signals, and the New York Stock Exchange at 56%.
And just to reiterate, for those who have never seen our show or are familiar with the Silver Cross Index, that means that the 20-day EMA is above the 50-day EMA, or it's on a silver cross.
Right. And I'm thinking this is one of the best breadth indicators there is out there. I mean, it really gives you some pretty succinct, specific information about the components of these indexes. No new highs today, no new lows either. So because we're so close to all-time highs, we've run out of just any hint of new lows. It'll be that way for a little while. Okay. Silver Cross Index for the 500, 400, and 600. Again, we saw 57% on the large cap. Mid cap is at 48%, and the small cap, yikes, is down at 37%. This is this chart we've included in our chart collection more recently, showing the cap weighted SPY against the equal weighted RSP, and note that it's down at the bottom of this trading range, which is held for about 2 months. Volume ratios, as you might expect, we did get climactic volume here on the S&P down divided by up volume ratio. This can get really exaggerated because you've got this one, you know, the New York Stock Exchange version of this, not nearly so, but the S&P is such a homogeneous group of stocks. They're all large cap stocks, and they tend to all go in the same direction. Once in a while, you get them all advancing in a single day. But so this is one of the indicators we look for climax activity. And as you might imagine, we do have quite a bit of other indicators. Net advanced declines, really heavy down spike. Net advanced decline volume, another down spike, an up spike in total volume for the S&P. So yes, we have, this is a climax day. So what kind of a climax is on, let's see, on Thursday, we had we did have some climactic activity. It was kind of light, but that was like an downside initiation. Even though this was a heavy day on Friday, it didn't get any climactic indicators. Today, of course, this would be, since we had an initiation up here, downside initiation, this is a downside exhaustion. That doesn't mean that this down move is through. It could be, but the best thing we would look for at this point, the most likely thing is some churning. Tomorrow we might get a rebound of some kind, but at this point, I wouldn't buy into any rebound unless it's really extreme. The Swenlin trend oscillator for breadth, this nice down spike on that. Same with STO volume. These indicators haven't updated yet. Note that they're not really over, they didn't finish last week in the particularly oversold level. The Silver Cross and Golden Cross. The Golden Cross index is going to take a while to turn down, just like you see up here. We've penetrated. Actually, it did intraday did penetrate the 50, but it's got a long way to go before it goes down and penetrates the 200 EMA. So standing by on that. And our intermediate term indicators still there, diverging negatively, have been for quite a while, months. It's negative divergences. Somebody complained, well, we always hear about negative divergences. And well, you do, but that's what tells you that things aren't quite right. We don't know exactly what will happen in many of these cases, but that divergence on the Silver Cross indicator index was, to me, that was weighing very heavy on the market, and it finally bought us some downside today. Bitcoin is down here approaching that 30,000 support. It's basically been puny for about a month here because it started out with a nice range that it could have possibly recovered from, and then it stayed at the bottom of that range and it's just dribbling down. I can't predict it for sure, but I fully expect that it will break down at the way things are looking right this minute. The dollar did fairly well today. And we'll check that against the gold. Yeah, pretty much they were in exact opposite, what do you call that?
Correlation.
Correlation, yes. And the gold, it's got a bearish rising wedge here. I can't say that, all right, we've had a nice up move, but I don't see a good solid intermediate term rising trend established just yet. It could look worse. The miners, while we're at it. Okay. This line of support is based primarily on these two bottoms here, but I noticed that we have another bottom back here. So it was violated today, but it's closed pretty much on that line. And let's see, I think we've got a problem here. Yes, we have a top below the signal line on the PMO. So that's a negative. So I've been looking for it to head down in this general direction. Maybe we'll find support there. Then we'll have a solid, a nice broad double bottom, but still right now, this is looking negative. Crude oil breaking down big time. And, I want to look at that. I want to look at the weekly chart. Okay, this is obviously a long-term resistance here. I'm not sure how much. I'm not sure how much we're going to see this running out. Right now, I was talking about the Saudis are pumping more oil, et cetera, et cetera. It sounds like we're going back 4 years ago for that story, but I'm not seeing a major downside for oil at this point. But of course, it is in a negative configuration with this PMO headed down and challenging this. That's a different rising trend line than on the 1 year. So I would say it's broken down through the 50 and this rising trend line. I guess I'm using across these two bottoms, but the longer you go out on the charts, you're going to find different key points to draw your lines across. And bonds up a big time today to over 2%. And just getting right into the 10-year, it's 10-year yield down below 1.2%. Not looking good. And of course, this negative configuration. What I wanted to note too is we had this is kind of a thing you put right in the textbook example, is you had a breakdown and you had a reaction rally back to the breakdown point, and then it started back down last week And expected it to go on maybe and at least to test this support, but no, it's even broken through this support. So that's not looking immediately very good.
No.
And I think that I have covered it all.
I think you have. It's going to be interesting. I've heard, and I tweeted about it, I'm wondering how many people think we're going to have a dead cat bounce tomorrow, because we did get those very climactic readings. I mean, do you look at those downside readings as an initiation, or are you seeing those as an exhaustion type of a move? Let me go.
Well, as I said, when you've had an initiation, then you don't get another initiation in the same direction. And so this one is an exhaustion, but it's probably a temporary exhaustion at this point. Okay.
It reminds me of this back here.
Right. It's just it's about the same amount of downside, and it's at this point, I think the best you could hope for is no follow through tomorrow, and just some churning, something of a bounce, but not a lot.
Mm-hmm. Well, like I was saying in my trading room this morning, I had a lot of people that have their hands out to catch those falling knives right now.
Right.
I get wanting to pile on a position now that it's pulled way back. I understand wanting to take advantage of this pullback so you can get into some stocks that maybe were expensive. But when you see a PMO sell signal, when you're seeing a VIX like this, people are nervous. So yeah, I would expect kind of a reactionary bounce, but I'm not so certain you'll want to be opening, making yourself more exposed to this.
If you look back at October there, that was probably one of the best times to be getting back in or adding to positions. Since it's been going up pretty steadily, and there haven't been any pullbacks that I would consider to be tempting, with the market being so overbought as it has been this entire time.
Yes. All right. Let's go ahead. I'm going to look at some of the sectors. I don't know if I have time to go through all of them. So what I want to do is go through those top sectors, those defensive sectors right now, kind of the ones that didn't lose as much today because all of them were down. I'll also take a look at energy because we did lose our trend model signal on that one.
Yeah, and look at the financials as well. That's interesting.
Okay, certainly. All right, so here is consumer staples. And really of all of the sectors, this is the one that actually looks a little bit healthy, if you will, mainly because, like I said, I think more people are moving into those value stocks, those high yielders. You usually find some of those in the staples area. And, if you're absolutely having to keep yourself in the market or exposed, this is probably one of the better places you could be. But look at that BPI just really falling out of the sky. We do have the silver cross, though, with a nice move above its signal line, and we still have pretty good participation that seems to be increasing here under the hood. So of all of them, I think that's probably your healthiest out there. XLU would be one that would come in second, in my opinion, but even so, it's really starting to see some damage here. Great look on Friday with that breakout from that declining trend channel. I mean, that looked really good. Of course, it pulled way back and now it's back in that declining trend channel. We do have a very short-term rising bottoms trend line, though, that is still intact, but We've got, again, there's your BPI falling below the signal line, still decent participation, but maybe even overbought in its participation. So we have to be a little bit careful there, but you can see certainly relative strength against the S&P has been there for utilities. And then we'll look at XLE. And, obviously we looked at the oil chart. It's not surprising that we saw a continuation here of the decline that had started, but there's your new intermediate term trend model neutral signal where the 20 crossed below the 50. So basically it just lost its silver cross.
Right.
And looking under the hood, I mean, you've got a PMO that's just headed straight down. It's not even really that oversold when you look at the previous pullback. And then of course, participation right now, not one energy stock has its price above its 20 and 50. So we may have half of them with a silver cross, but we don't have any of them that are going to be able to hold it if they can't keep their price above their 20 and their 50-day EMAs. All right, you mentioned financials.
Financials, yeah. It's interesting how it was moving sideways for about 3, maybe 4 weeks until that top you can see we marked with a dotted line there. But notice how the Silver Cross Index has just been dropping like a rock.
Right.
Before, even, up to last week, the middle of last week, it was dropping while the price was still holding. That it just is showing you there, it's telling you that this is not a good, healthy sector right now.
Absolutely. I mean, you have some participation going on here, but again, when I see these numbers lower than our Silver Cross Index, I mean, that just tells you there's a bearish bias.
Right.
It's just, I mean, right there for you. All right, let's see. I think we have time for another sector or two. Let's go to real estate because that has been an outperformer of the S&P. You can see it's pulled back. I want to come down here and show you the relative performance just to start out the gate. It's been a great relative performer against the S&P. All of those stocks have a 50 above their 200-day EMA. But again, here's what we were pointing out on financials. The Silver Cross is just falling down even as price was moving higher. The other problem I have right now with real estate, not only did, of course, that rising bottoms trend line get a little bit damaged here, but when you have a rising trend channel and you see a price not get to the top of that channel before turning down, that gives you a pretty good sign that you're going to see a breakdown, because you really want to see that it continue upward, obviously, into the top of that price channel, but not happening here for real estate. So, this has been an area where a lot of people have been putting money in while the market's been weak, but just be careful here because now we've got that rising trend that's being broken. And
it's a rising wedge too. I drew across the tops.
Mm-hmm.
That the last two tops, yeah, they're the June and July tops.
Right, and that's a rising wedge.
So we expect it to.
Yep, you can see the damage being done under the surface as well. And again, negative divergence on that Silver Cross. We could already see participation was fading even as price was rising. So, this has been a great performer, but it's, we're losing that participation. You can see under the surface as the price above the 20 and 50 continue lower. At this point, here's our 86% here. Both of these numbers, again, are lower than the Silver Cross reading, meaning there is a bearish bias. We're looking at a high likelihood that number is going to go even further down. And of course, you never like to see a PMO sell signal like that. All right, I have just enough time, it looks like, to go through my diamond of the week. So before I get started on it, I just want to say that at this point, my DecisionPoint Diamonds subscribers, my Diamonds report, that's my stock pick, for traders report. And as I said in our free trading room this morning, limiting exposure right now is probably more wise than trying to even short what's going on, because it's just been, it's wacky out there. So we need to be really careful if you're going to increase your exposure in any way. So I would be looking for high yielders. I would be looking for charts that look a lot like this, particularly because I can set a really tight stop. So if you go for this, it's up a little bit here, Flowers Foods, FLO, and you can see there's a nice little double bottom here, but it came up close to that confirmation line, and intraday, it didn't seem to want to pass it. It's now, it did close up slightly. We have a positive RSI, the PMO's on a crossover buy signal, and you can see how volume, even though we've had mostly flat bottoms, volume has been the rising bottoms on the OBV. Scooter's almost in that hot zone above 75, which means that it's in the upper quartile of all of its universe, which in this case is all mid-cap stocks. So among all mid-cap stocks, it's in the top at this point, 26, 27%. And again, relative performance. This is something that I always look for because as we talk about on Wealth-Wise Women, Chart-Wise Women, a lot of your stock's price, probably half of your stock's price, is dependent on what sector it's in and what industry group it's in. So you want to be in a place, especially a group, that is showing increased relative performance, which is exactly what we have here. And then I also like to look at the stock versus the S&P overall, because bottom line, that's really important. Is you want to be in a stock that is outperforming the S&P. Many times you'll find that you have groups that are moving up, but you have stocks that, in this case, Flower Foods against its industry group has been performing quite well. But what does that mean when you're in a group that's failing? That means that you're not falling as fast, or you're doing what we're seeing here, which is falling and then maybe, consolidating sideways a little bit in a trading zone. So that's why you see outperformance against the group, but we want to find a group that is certainly performing well and moving to the upside. So I like Flower Foods at this point. It is in that consumer staples, food products area. I had last week, and I'll just show you really quickly before we sign out, Kroger was a diamond on Thursday. And really it came from, again, the staples, this case, food retailers. It had a great day today. That's wonderful when that happens. It doesn't always happen. Our diamonds in the rough don't always perform to this degree, but certainly things were lined up already on that chart, which was why I presented it on Thursday. That's all we've got today. I want to wish all of you a great week and happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.